Many people are making money on futures trading or perps trading. So futures and perps trading is all about predicting on the price of a coin or a token, whether the coin will rise or whether the coin will fall. For example, if a coin was 50 CD and suddenly came to 60 CD, the coin has rise. And if a coin was 50 CD and suddenly came to 40 CD, the coin has fall. You get me? For rising and falling. So futures trade is just like betting on the price of a token or an asset, whether to go up or go down. That's all about futures trading. So on this video I'll be using Binance. So if you don't have a Binance account, use my Binance link to sign up on a Binance, do your KYC and start trading your future. If you are watching this video on YouTube, you can get my Binance link under this description of this video. If you are watching on TikTok and other platforms, you can my bio, you can get my Binance link there. So, by the way, my name is Coach Moro. If this is your first time meeting my video, kindly subscribe or follow for more crypto tips like this. Let's dive in. Practice makes man perfect. So I'm basically doing this video for the beginners. You need to first try or practice with this tutorial before placing a real trading. So on this video I'll be using a demo account. It's a practical account, it's not a real account. Okay, so you click on the dot which is beside the base and the USDT, where the drop down is, I mean the peps. So you click there, then you select demo trading. Also click on BTC USDT. But do you know something? We have BTC and USDT. BTC is the base currency and the USDT is the quote currency. So you can even decide to change to USDC or stuff. So the base currency is what you are trading on, the asset you selected, whilst the quote is often the stable currencies. So you can decide the currency you want to trade. Right now I want to search I want to trade with BTC, which is Bitcoin, but let me test Solana. Yeah, so SOL for the Solana, SOL for Solana, and ETH for Ethereum, BTC for Bitcoin, SRP for Ripple and stuff. So right now let me go for BTC. So we have something called leverage. So in leverage, whilst increasing your leverage means you are increasing your capital you are trying to trade with, and whilst increasing your capital you are also increasing the potential risks of losing your capital. Okay, to explain this better, assuming you started the trade with $50, so you can leverage it, maybe times 10 of your leverage will become $500. So if you lose 10% of the 500 you are trading with, it means you have lose your capital. You started with, aka you have been liquidated from the market. One of the term we use. And please note, it's not a financial advice. I will recommend you to use a range of leverage between 1 to 3, at most 5x leverage is recommended, and that is also not a financial advice. It's just only for educational purpose. Okay, so as you are using the leverage to increase your profit, is the same way you use the leverage to increase your risk of losing your profit. So it's hard for you to choose a suitable leverage that will suit you. We have something we call the margin or the margin mode. This margin is all about giving the permission for the market to access your funds. That's all about the margin. And we have two types of margin. We have the cross margin and the isolated margin. Okay, to explain the cross margin better, assuming you have two trades. One, you have earned or you are winning the trade about $50, and we have the other one which you are losing the trade. And at that point, when it is on cross margin, it will adapt or pick money from the one you are winning to enter the one you are losing the trade. That's all about the cross margin. And if you switch to isolated margin, the isolated margin means if you execute a trade or initiate a trade, it means each trade will have its isolated margin. Means if you are losing, you are losing. If you are winning, you are winning independently. So if you are having a trade and you are losing and the other one you are winning, it will not pick money from the one you are winning to enter the one you are losing. So that's all about isolated margin. So I will recommend you to use isolated margin. And note, it's not a financial advice. And we have something called order. The order is all about how you want to start your trade or execute your trade. Beside the market, you can click the drop down menu. We have multiple order types. We have the limit order, post only, market, conditional, a lot. We have a lot. But the one I usually stick to is the market and limit order. The market order. So when you choose market order, you enter the trade at that particular time, at that particular value of the asset you are trading on. That's for the market order. And with the limit order, you will enter the trade at a specific price of the coin or asset you are trading on. So for instance, when your analysis tells you that when the price get to the price of Bitcoin get to 65k, you must enter the trade. So you have to use limit order. So when you are certain about your analysis, you can go on to use the market order. Okay, so right now I want to initiate the trade or start a trade. So I'll be using an amount of 100 USDT. I'll use an amount of 100 USDT. Okay, so 100 USDT. But you need to set your TP, which is take profit, and stop loss, which is SL. Nothing else guaranteeing trading aside your TP and SLs. You need to ensure you set them before you execute the trade, because it's very important. If not that, you'll be liquidated from the market, I tell you. One thing you must know about the buying and selling is, with the buying, if the price is increasing, the market is buying. If the price is decreasing, the market is selling, where the indicators are red, and with the buying, indicators are green. Okay, so in buying, it means the price of the asset you are trading on is increasing, whereby let's say if Bitcoin was worth around 60k and suddenly came to 61, the market is buying. If Bitcoin was 60k and suddenly came to 59k, it means Bitcoin is selling. So that's all about the buying and selling. But please note, in futures trading, buying the Bitcoin or selling the Bitcoin, that doesn't mean that you are buying the actual Bitcoin. You are just predicting that the market will go up, or maybe in the next move of Bitcoin price it will go up or down. Just that you are predicting. You are not buying the actual Bitcoin or you are selling the actual Bitcoin. You are just predicting the price of the market by your analysis. So if you want to see the chart view of the futures trading or the asset you are trading on, you just click here, can view the chart. But I personally use TradingView to do my analysis before I use Binance to place my trade. So you have something you call time interval or time frame interval. So you can find that here. This interval is the duration of between the candles of which it is formed. So you can set it. Okay, let me choose 1 hour. Okay, so let me choose 1 hour. So now the candle will form 1 hour to each other, which so in this session the candle forming will match respect to the time duration you chose. Yeah, so that is all about this time frame interval. So anything red here represents selling and anything green here represents buying, so take note of that. So right now let me choose 1 seconds interval. 1 seconds interval, let me choose. So you can see the chart is oscillating. Yeah, the chart is now oscillating every seconds. Yeah, the green candle, the green candles, yeah, they are all oscillating. Okay, so right now let me choose 1 minute. So as I chose 1 minute, the candlestick will form 1 minute after another, so take note of that. Okay, so without wasting much time, let's get to our trading session to praise our trade and set our stop loss and take profit. Let's move on. Okay, so uh, you can check we are using the market order, trading with an amount of 100. Then so when you are choosing the buy direction and setting your stop loss you must set your stop loss below the current price and set your take profit above the current price. So assuming the current price is 64k, 65k is above the current price and 63k is below the current price, which is 64. Take profit 64,000. Yeah, so you see the current price was 63,600, and yeah, it's fluctuating, so I'm not able to mention. And the stop loss, you must check the stop loss from the red session. You must check it, must set your stop loss below the value of the red. So that's what you must consider in setting your stop loss and take profit. Okay, so now I have placed the trade. I just click on the buy log, so you can see I'm losing 0.24% of the capital, as you can see. So ROI is the return on investment and the PNL is the profit and loss, so take note of that. And you can also decide to close the trade anytime you want. So after practicing with the demo account, you now tend to trade with a real account, with a real money. So with that, you will click on the asset, then click on transfer. You see where before the funding there is from. So when you make an initial deposit, which is the P2P, your money will sit on funding, so you have to transfer from funding to futures. So right now you click on to which is the spot wallet. You select the USD SM futures, the first option, then you enter the amount you want to trade with. So right now, wish you all the best. So practice, this is the process of futures trading. Please don't forget to like, share, comment and subscribe. Enjoy. For more, follow Coach Moro for crypto and tech tips like this.